Hey everyone, welcome to another YouTube video. Now you might have noticed that my Instagram has been disabled at the moment, but we're going to continue with the YouTube uploads, maybe even try and increase them slightly, seeing as I have more time. So today's video is going to be on Euro USD, and last time we did obviously an absolutely fantastic video, over 1,000 views already, which is incredible, and everyone found it very, very helpful. And we've even seen people who have messaged me directly saying how they've managed to capture, big risk to reward trades, 1 to 5 pluses, even one in particular 1 to 30 off the back of such a video. And it's amazing feedback, and that's what we're and then the whole reason I do it for, really. And so today I thought I'd just change things up a bit. We're going to talk about sort of more of a day trading scalping style. Now, over a 24-hour period, we are able to achieve quite comfortably 45%. 45% over scalping and day trading approach. I believe it's over roughly about 4 or 5 trades. Now, one thing I want to point out from the very start is that with these high risk to reward trades and high percentage returns, not to get greedy or unrealistic. Yes, these are completely possible in the market, but you have to ask yourselves what's realistic and achievable in the market. Now, the reason I'm going to go over these trades is this won't happen every day. This sort of price action, which is going to give you nice, clean opportunities, multiple times in a single day. It can happen, of course, and when it happens, it's good to be on the ball and to maximize those potential days. However, on average, majority of the time, even just one of these trades is possible per day, and even just capturing one of these trades at 1 to 5 plus is a fantastic opportunity and is still an amazing return. Because you have to think in terms of, once you are trading larger capital, even a couple of percent in a day is amazing. So just keep that in mind, moving forward. I want my whole mindset towards YouTube and doing these uploads isn't to try and inflate what's possible and create unrealistic expectations. Rather, quite the opposite. Show what's possible and try and point out what is realistic, and to keep a balanced viewpoint on the market. So that's my plan anyway, and so let's crack into it, shall we? So we're looking at Euro USD. This was actually on the 9th, the 8th, of September to the 9th of September, or maybe the 10th, roughly, or within that sort of just over 24 hours, probably about 36 hours, we are able to see these trades playing out. So we'll start off just go through the structure, really, shall we? So let's just get rid of this here. So let's take a look at the daily first. You can see on the daily time frame here that we have broken this minor structure to the left here. We've come to this high, and we have began to slow down, and then obviously begin to retrace at the least. On the 4-hour, we can see that we're coming to the first structural point, which is right here, which we also have a key level on. So we'll just put that on now, 120 there. So you can see held as support at the moment, previous resistance. When we go back in the past as well, held as resistance as well. Now, always remember as well, when it comes to, say, key levels, or just anything really in the market, nothing is 100% accurate. Nothing is 100% accurate. It's all about what gives you an edge. So as you can see with these key levels, it gives us a great edge, being respected at the moment, and then obviously previously as well. At times, breaking through, which is bound to happen. Again, not that 100% accuracy, but when you have your edge alongside your other confluences, it can then give you a fantastic confidence in the market, and even give you those profitable trades, which we'll take a look at right now, to be fair. So we're going to drop down now. So we've got our key level in place. We have our structure in place. We know that this is the 4-hour recent low point. Obviously, we know that price can come lower as well, but as you can see, we began to slow down here, which we will then break down into our order block as well, which you can see right here. Put that across. As we go to our 1 hour, we can again see that slowdown, that lateral movement, sideways movement, which is fantastic at our order block. Now, we do get a reaction from our order block, but considering this is from a 4-hour, and as we can see from the 1 hour, we can't really refine it any further. The stop loss size on this particular one would be roughly about 13 pips, meaning even to get our 1 to 5, we would need quite a considerable move. And as I said, this is more of a scalping slash day trade approach that we're looking at today. So what can we do in this scenario? So when we drop lower, so we'll go down to the 5. We'll go down to the 5 minute. Okay, so we're going to be starting our movements from here. Now what we can spot is obviously our last place before we broke structure over here, being our order block here. Okay, so that's one area that we're going to look at. Now we're looking to long into this area. Now how can we do that? So when we go down to our lows, we can see that slow down here on a sort of micro level, if you will, so even lower time frame, which we'll go down to now. So down on our 1 minute time frame here, we'll go further left, I believe. Here we go. So you can see this key level again being respected even on the 1 minute here quite nicely. This is the Asia session here. So this trade actually plays out during the New York session. We come into our order block, we see our impulsive move breaking the minor structure to the left here, giving us our first trade opportunity. Okay, now first trade opportunity coming at 8050, giving a nice round psychological number. You can see as well, impulse, pullback. Now we could try and use this order block. I don't think the price just skims it. That would be a bit more aggressive, if you will, and potentially not possible for us to capture, depending on spread, right? Well, with this, we can see that impulse. We see price coming down, treating as support resistance on a minor level here before then continuing higher. Now we've put our stops just below the low, leaving a half a pip difference as well to give us that breathing room. On EUR USD, that is probably advisable at the least. And then we can be targeting obviously this order block at the high. Now obviously if we put it on the exact order block, you can see we get a 1.6. However, if we bring that back down to 1 to 5 or 1 to 6, should be actually possible, to be fair, just before the order block. Yeah, so 1 to 6, beautiful trade right there. Again, to break that down, structurally, we've come into a 4-hour higher low point. We have then reacted from the 4-hour order block, giving an impulsive move, breaking that minor structure to the left there. We've then had a retracement, confirmed the support resistance and rejecting that area. We've then had our stop just below the recent low, taking the risk, obviously understanding our edge when we talk about structure, when we talk about the key level, the order block, and then that impulsive move, all to give us confidence in taking and giving us an edge in taking this trade and fitting our plan. And then we take the trade accordingly. So keep in mind, as I said at the very start, that one trade, 6% in a single day, in a single move, in a relatively quick amount of time. Let's just check that. So price hitting our target roughly around here. So about an hour and a half, right? 6% can be you done for the week, for example. Could be you done for the week, you know, depending on what account size you have, could be done for the month. Right, so these are the things you have to ask yourself. Obviously, we're going to go over some more trades here, but again, you have to ask yourself what is achievable, what's realistic, and what is acceptable. What is it that what works for you? Okay, so managed to achieve 6% on this particular trade. Now, with this 5-minute order block, we can actually use. I don't know if I used this on the last video, but you can use a GAN box. Now, I only look to use a box tool when I go lower in a so in below the 5 minutes. So above that, I will look to use this GAN box just to allows you to refine your trade without using lower time frames. As you can see here, using that 50% mark there. Again, just keep in mind, I'm not obviously going into detail into say order blocks and so on and so forth. If that's something you are interested in, then by all means you can drop me an email in the description below, or even drop us a message on the Viper group page, or even send an inquiry on the website. All the links are below in the description. The website will be revamped and released on the 9th of October, so roughly just over a week's time, where there'll be different options for you to choose from. So hopefully that'll be even better for you and something that you'll definitely take advantage of. So let's look at this trade here now. So we can see that 50% mark, nice and round psychological number over here to the right, sorry, 18280, sitting just below that 50% mark. Again, accounting for spread and slippage, giving us a nice 2-pip stop loss just above the order block there. Now, when we bring this down, where would we target first? Now, 1 to 5 fits perfectly into our last order block where we saw our impulse from, which took us into this order block that we're taking this trade from. So that would be our first point of call. Keeping in mind as well that we're coming towards the end of the day and actually about to have a 4-hour close at 6 o'clock, which I think happens literally just at our take profit. And that could be another trade, 1 to 5. So in this one particular day and in this one particular session, nice and clean scalp moves, we've managed to achieve 11%. Right, 11%. Again, very similar for this trade here. we can actually see the structure in play. So if we go up a time frame, we can see 15-minute. We've refined it down to the 5-minute. We can see that price has had an impulse move from here, creating that new low, and then it's held price. We've then managed to get out at that 4-hour close, and we're not looking to hold a trade going into Asia session, especially for the daily close. As you can see, after our TP was hit, price did come up. I think it just spikes above, so would have taken our stop loss if we didn't give any more breathing room. But again, we're not bothered as much because we have taken our trade. Now, let's say if you didn't close the trade and you took a large partial at 1 to 5, taking say 80%, so securing 4%. That's still 10% for the day, and that small peanut, as you say, to ride would have been taking our break even, and even if you had your stop loss still in play for a very small loss. And even if you didn't close your trade, for example, you've already achieved 6% here. And if you take a 1% loss because you're looking to hold maybe to the key level, for example, or even to this low, then you're looking at 5% overall for the day, right? So to keep it realistic and to sort of discuss the possible outcomes, that's what was possible. Now, what we can see here, though, is we have got a nice key level that has formed on a sort of micro level, like 15-minute right here. See, 18300. Right? We can see it's been held as support, previous resistance, and then price has come back, which we'll look at in a moment. Now, what we can see, what happens after overnight, going into the 9th of September, we have the Asia session. Now, the Asia session leaves a lot of liquidity on that key level, right? And it doesn't get taken. We then see, coming into London, an impulsive move. So as we break down lower, and we'll go look at that price action there. As we break down lower, we can see an impulsive move from this 5-minute, breaking the minor structure to the left. What we can then see is a slow correctional pullback. Okay, so if we put our order block on, perfect, and then we obviously would go long at this order block. So this is more of a London session trade. So this video will show a great example of how you can pick one pair, one session, and look for one particular move and using one particular edge in the market, and it will definitely give you enough to trade full time from. So if we take a look at this, so taking a look at this particular trade here, we can actually see if we give that breathing room half a pip to the upside there to account for spreads. And bear in mind that as well, when you're trading at this intricate level, spreads and may not tap you in, or even could tap you out, right? So it's something to keep in mind as well, to keep a realistic mindset and a viewpoint on the market. Now again, with this, we could be targeting our order block at the high here. As you can see, at the high, where we've originally had this impulse move down from, we can then see price coming back, and this would even give us a premium for this overall leg that we see here. Price coming back into a premium. Even for this leg here, we can see the original leg here. We can see that price came to that 50% mark, didn't get into a true premium, and then obviously later on, the next day, pre-New York, post-London session, we come into the, which we'll get onto in a moment. So targeting that order block there. Again, keeping it realistic, so not trying to say we'll target all the way to the extreme, but even just to the order block itself, just below, giving us our 1 to 8 roughly, I believe. Yeah, so just below the order block. So giving yourself that little breathing room, being more realistic, not trying to get every single pip that's possible out of the market, but rather price is moving in that direction. So we are looking, and price should react from that order block, where we would be looking for our next short trade, especially if you're, say, a New York trader, New York session trader, you'd be looking for that short trade, and you may not have taken this long trade, right? But if you're a scalper who's full-time and maybe he's on the market 24/7 or throughout the London and New York session, then you may have captured maybe looking to capture all these moves. So far we've managed to do 6%, 5%, that's 11, and then another 8%, so giving us 19% overall so far. Nice and clean trades, all following the same edge, all using obviously the liquidity here. You can see obviously the Asia high taken there, leaving those relative equal highs as well. We then broken through. We had some consolidation, sort of slideways movement coming into New York, and just sitting below our order block as well, which is fantastic, leaving relative equal highs, leaving relative lows as well. Price then takes the low, takes the high, grabs that liquidity from the order block. This is then another trade opportunity for us. Now, even if we set our entry, you know, at the 50%, it would be quite aggressive because we don't have any, at this point, we don't have any confirmation of a short, of the short trade. We've just seen a quite bullish move in there. So if we then break down lower and we're following the same principles of structure and overall, you know, bias. So let's take a look here. You can see impulse move, micro level. You see that slowdown in price. We see that impulse move, come back to the order block here on the 1 minute. We'll put our entry just below. And then we can then comfortably have our stop loss just above. So taking a look at this now, let's see, 3 pip stop. So giving that half a pip or even maybe quarter pip difference there, but we've followed the momentum. Really, that's what gives us the confidence to be able to take a trade like this. We've seen that it's slowed down our order block. It's grabbed liquidity as well from the Asia session, London session high as well. We're coming into New York Open. We are bearish overall. When consider the reaction we've had from the 15-minute, and now we can take a look at where we would be targeting. So a lot of people might have been looking for a long trade in London from taking the Asia low. Now that hasn't happened yet, right? So now we can be looking to target that Asia low liquidity alongside, if we look to the left here, our last order block, which is right over here on that 1 minute time frame where we saw that impulse from. Okay, so we'll just drag this across here. Okay, now this is great. Why is this great? Because we can see that price then reacts straight from this order block. This gives us a nice 1 to 10 trade relatively quickly as well, very aggressive. Again, following the overall momentum, following the liquidity and where that's sat in the market as well. Price then coming back, taking the London low, the Asia low, all those equal lows as well, straight back into that 1 minute where we impulse from. Now you can see quite nicely that price then comes back, which gives us a fantastic trade. So when we go back to our lower time frames now, if you did miss that initial short because you might have only just got on the market when New York opened, for example, we then see this move. Now this particular trade is one that I took myself. This one right here, because I missed the original move. Yeah, I actually missed the original move, and I actually had to take this trade here. And as you can see, very, very close to being potentially stopped out there on this trade, as you can see here. But yeah, price held, trusted the analysis, and it took us into our next trade. What I'm going to do is I'm just going to delete this one off just to clear things up, and even this larger one here. Before we go into that, where was the target for then this trade? The target for that short trade that we're about to mark out in a moment came from our 5 minute time frame. So as you can see here, we look to the left, we can see our last order block. So we just used the 1 minute, and on this occasion we're going to then use the 5 minute higher time frame. The price has then reacted to, let's make sure it's accurate, there we go. Price has then reacted to the 1 minute, just coming shy of the 5 minute, the higher time frame, the one that holds more weight. Price then came back, respected the bearish order block, so that bearish order flow sort of indicating that the bears are still in control, and if anything you have to think it's enticed early buyers into the market with this impulsive move. So enticed early buyers, creating liquidity below, and then price came back below. So this then gives us a fantastic move here, which we can then use. Which we can then use just below the order block, and then again stop loss just above, giving us that 2.5. Now I actually did, as you can see, you know, spread would have taken you out here, and I actually used a half a pip difference, so it was very, very close. And again, you have to have an edge in the market, right? So trusting your plan and analysis. So here we've taken the liquidity up from the highs, we've come down, we're respecting this bearish order block, we're expecting price to come into our 5 minute block, and therefore you know, fits our plan, and therefore we should take the trade. Now if price was to stop us out here and continue higher, that is absolutely fine. That is the whole point of having an edge and a plan in the market, and as long as you followed that, win, lose or break even, it does not matter as long as you're following that plan. And that's where a lot of people, majority of people, end up going wrong. They don't have a plan in the first place to follow, and therefore they make these mistakes, and they aren't making consistent profit. So always have to think about that. I've mentioned in previous videos as well, if you are wanting a plan, a trading plan, feel free to email me below with the email in the description requesting that trading plan. You can find it on our website. That'll be out on 9th of October. It will be a free PDF download that you can download the template for that trading plan to really help give you an edge and give you something to think about and sort of plan around. So here you can see we have a 1 to 8 then. So far obviously we've got 18% there. We got now we've got 26, and then we have 31, and then 37. So 37% so far in total. And as you can see, we got our last trade right here, which is actually for our long trade from the 5-minute block there. Last trade here from the 5-minute block. It can give us a good trade from the 60 level, I believe. We give that breathing room. So again, looking at 50%, giving us, so 50% is about 50, I believe. Yeah, 55, so half a pip difference, as we've basically used the whole way through the video now. And a stop loss just below, so 2.5. And then we managed to get to even to our key level. Because bearing in mind, by this point, we're coming towards the end of the day. Even if it's just to our key level, that gives us roughly 9%. Even if we stop there, 9%. That's enough, right? That's enough. Even if we take it even a bit higher, we left these equal highs here. Even if we targeted those, for example, so that liquidity, we're talking about 11%. But even if we're just keeping it nice and conservative and just below our key level, let's go 9% to round it off. That would then be leaving us on 46%. So I said 45 at the beginning. I was 1% off, but 46% over a period of roughly just over 24 hours. So the first trade came in at 4 p.m. just about on the 8th, and our last trade came in at 4 p.m. just before 4 p.m. on the 9th. So 24 hours, we're talking 46% potential. But even, like I said, just one of these trades, all of them, you know, the minimum being 1 to 5, and the highest being, I believe, 1 to 10, if I'm not mistaken. 1 to 10. Even just capturing one of these trades is enough, to keep that in mind. This is one pair, one set of price action, and 2 particular sessions, so London and New York, giving you a fantastic price action. Now, this is something, a way of trading that interests you, and you want to be able to see the markets in this way, then feel free again to send us a message on the Viper group page below, send me an email, or even check out the website. Please do wait till the 9th of October for our new website release. Hopefully you all enjoy that and can provide immense value. Please do also let me know what you want to see on this YouTube channel. Anything that will help, anything that will bring you more clarity and value, I am all here for it. That's all we want to do, to be as real and realistic as possible within these trading markets. Help as many people as possible, because that's what it's all about, legacy at the end of the day. To help people grow, help people to achieve their goals, especially in a space like this where we see a lot of people unfortunately get scammed, unfortunately get tricked, if you will, and duped by so-called market leaders who trick people with lifestyle marketing and false promises. It's absolutely disgraceful, and that is why we're so motivated to do what we do, because we want to see a change to that. So yeah, please like, subscribe, drop your comments below. Thank you once again for all your support and for watching this video, and I'll catch you on the next one.